Welcome to Money Making Sense. We have come to the end of our tax tip series, but before we finish, we've got one more subject to talk about. This is tax tip number 10. It's all about kids in college, and if I can write off my kids' college tuition, oh, you bet I want to know about that. So joining me is Mitchell Monker. You are with Jones Simpkins.
Yes.
Is that right? All
Yep,
right.
that is correct.
Welcome to the show, Mitchell.
Thank you. Glad to be here.
So tell me all about tuition, college tuition and kids, and how do I write that off and get money back?
Okay. So one of the greatest tax credits that exist is a credit for tuition paid for your kids while they're attending school. And so the American Opportunity Tax Credit is a great credit that you would want to take advantage if you have a child in school at a higher education, college or university.
How many people know about this credit? I mean, I've not really heard about that before. So how would I find out that I get this credit?
It's pretty common. Most people know that there's education benefits. As far as, I don't know if the education's informed the students about it or not, but any CPA or anyone that prepares taxes is going to know about these credits because they're great credits. They're dollar to dollar for the first $2,000 of qualified education fees.
Okay, so if my child's tuition is $5,000 for the year, I only get $2,000 of it back, and I still have to pay the other $3,000?
Well, the first $2,000 is dollar for dollar credit. The next $2,000 you get 25% of. So the maximum credit will be $2,500 that you would get to offset those education costs.
So if my child's tuition each year is $5,000, I at least get half of it back.
Yes.
I get the $2,500 back. That's not bad.
Yes. So that's actually during the first 4 years. Before grad school. So the university determines that if they're a grad student or not. So, and it's only available for 4 years. So you can only take that credit against that individual for 4 years while they're below grad school.
That's probably why my parents were not real happy when I wound up on the 5-year plan.
Okay.
Because they couldn't write off my 5th year. Is that?
So the American Opportunity Credit is available for just 4 years, but then there's another credit called a lifetime learning credit. Now that is available for your entire lifetime, but it's a lower credit. It's not as good of a credit as the American Opportunity Tax Credit. Okay.
Is this credit going to so we just had a brand new tax law go into effect January 1st, or maybe it was the middle of December. But anyway, for 2018, is this college credit still available?
Yes, the credits were not impacted. They are still allowed and will be allowed going forward, both the American Opportunity Tax Credit and the Lifetime Learning Credit. But what was eliminated, not with this recent tax bill, but it was set to sunset or expire as of 2016, was what we call the above-the-line deduction for education expenses. So you used to be able to take an expense against ordinary income for these education credits or education expenses, and that was just an ordinary deduction. So that expired at the end of 2016, so that is no longer available for 2017 or going forward. But the credit usually was always better. You kind of got the greater of. You could choose whether you wanted the deduction on the front of your tax return or the credit on page 2.
But you couldn't take both?
No, it was one or the other.
I like taking both.
Yeah. Yeah, most people would.
Okay. So this lifetime credit, because I want to go back to school.
Yeah.
I can take that credit?
Yes.
If I do want to. So what is that? So you said it's not as much as the child who's in college, that first 4 years, which is up to $2,500 a year. How much for me, if I go back to school, what's my credit for the lifetime?
The max you could get would be on $10,000 of expenses, and it's 20%, so a $2,000 credit.
Okay.
But that's why the American Opportunity Tax Credit is better, because it's dollar for dollar for the first $2,000. where the lifetime is only 20% of every dollar, up to a max of $2,000.
Oh, so if I go to a college, like a really expensive college, which is $10,000 a year, I'm going to get my $2,000 that first year, and the next couple of years it takes me to finish school, I don't get any money back.
Yeah, that's right. You would be capped at $2,000. So.
Oh, okay. Well, that's important to know.
Yeah.
Okay.
Yeah.
So, how long can my child has been going to school off and on. So they haven't done 4 full years of college, but they took what the British call a gap year. After graduated high school, they took a year off to backpack and do all that stuff. Then they went to college for a year, and then they got a job, and it was really exciting, and they didn't want to go back to school at the end of the summer. So then they worked in that job for a year, and then they went back for another year to school. Does it have to be 4 years continuous that I can write this off?
No. So one thing that we'll look at doing, if that exact situation where they're just taking a few credit hours here and there, but then we know at some future point they're going to dive in and finally get school out of the way, right?
Yeah.
And have 15 or 18 credits a semester, and then their costs go up significantly. So you can actually choose not to take the credit those first few years where they're dabbling in school and not really incurring significant expenses. So then the limitation says as long as you are not a grad student or your first 4 years of undergrad school, freshman, sophomore, junior, senior status, and that's a status that the school defines you as, then you can take the credit 4 times. 4 years, 4 different tax years. Okay. And so that would be a planning that you'd want to consider. You don't want to take the credit when you only have $1,000 or maybe we'll say $1,000 of education expenses when the next few years you're going to have much more than that and get the full credit.
Can if they are, let's say they finally decide at 25 years of age that they are ready to dive in and do all their 4 years of college, do I still get to write that off as the parent?
No, they're past the age, so you can't claim them as a dependent, and the credit goes with who claims themselves as the dependent. So you can, as a parent, take the credit from ages 19 to 24 as their student, so that's a special exemption, still treat them as a dependent, as long as they're full-time in college, which is meaning that they're enrolled for 5 months or part of any 5 months during the calendar year. And then you as a parent can claim the education credit on the parent's tax return. But then after that point, it would be on the individual's, the student's tax return once they surpass that age.
Okay. So let's say my child is in college. I'm doing taking the tax credits because they're 22, so they're under that 24 cutoff age. But I've also decided to go back to school. Can I write both of us off on the taxes?
For the American Opportunity Tax Credit, it's per individual, but the lifetime is essentially per family or per tax return. So there's a limitation there. It's one's per individual. So if you had multiple students, multiple children as students at a university, you could take that American Opportunity Tax Credit for each one of them as long as they qualified. But the lifetime learning is just 1 credit per tax return. So that's why the American Opportunity Tax Credit is better.
So what if I filed, isn't there one where you can file you're married, but I'm filing singly as a married person?
Yeah, married filing separate. The credit's not allowed to if you file married filing separate.
What? That's not right.
Well, most of the time you want to file married filing joint if you're married because the your tax bill and benefits like this credit are going to be better. So I have very few instances where we've ever filed clients married filing separate tax return. It's almost always joint.
Okay, 99%. But my husband and I are both going to college, and we both want that lifetime thing.
Yeah. So you're not going to get the credit if you're filing separate returns. So he has to be married filing joint.
That just weird. So what if
the tax law is weird?
Yes, it is. And I don't know that the new tax law has fixed some of those those complexities.
Yeah, their goal was to make it simpler, I think, specifically in this credit arena of higher education expenses. Nothing's been changed there. The law is the same now as it was. But overall, their goal was to simplify things. But for some taxpayers, that may be the case. But in general, no. I think it's still complex to most people.
Okay, so if my kids are just like maybe they're going to start this fall into college, I definitely want to get together with a CPA to just verify which tax credits are going to be best for me, especially if I have like a non-traditional student. Maybe they didn't go to college the first few years and there's a chance I'm running into that age limit.
Yeah.
Or even myself, I go back to school. I want to talk to my CPA and find out how to get that worked out. Or I already started last year and I'm about to file. It's not too late. Do I have to declare I'm taking these credits, or I just wait until I file and I can put it on there?
You do it when you file your tax return, so there's nothing you have to do in advance. But at the time you get your taxes and are ready to prepare them, you do have to have a form from the education institution or the university. It's called a 1098-T, and so you have to have that form to claim the education credits. And that form will, it's issued from the university where you attended, and it has all the information as to how much you spent in qualified tuition and fees, how much you received in scholarship that reduces the amount that you can subject to the credit, whether you were at least a half-time student, whether you were a graduate student. So that form gives you as the taxpayer and us as the tax preparer all the information, almost all the information that we need to claim the credit. There's additional expenses that can qualify that aren't just tuition and fees. Required books or required supplies and books for your courses can also be eligible for the credit. So you can add those to the 1098-T that you received. Things that we get questions a lot about is room and board. Is that eligible for the tax credits? The answer is no. Room and board is not.
Okay, because dormitories are expensive.
Yes.
My parents are like, you get 1 year and that's it.
Yeah.
It was less expensive to rent an apartment than to do the dormitory.
Yeah. So oftentimes we get a lot of questions as to, what are the other costs that we can add? Can I add the laptop that I bought my son or daughter? Well, the answer really goes to did the university require you to buy that laptop for a class she or he was taking? If the answer is yes, the syllabus says they have to have that laptop, then most likely that would be a qualified education expense eligible for the credit.
Okay. All right. Anything else as we wrap things up, Troy, that we haven't covered about our kids in college and what we can and can't write off on our taxes?
No, I think we talked about most of it. Again, the best bang for your buck is the American Opportunity Tax Credit. That's the one you want to claim. You get it for 4 years, and then after that, you're stuck with the lifetime tax credit.
Okay. Mitchell Moncour with Joan Simpkins. Thank you so much. I'm going to be coming to you. I don't have kids, but I'm going to go back to college, so I'm going to come to you. You're going to help me with that. And if you need any type of a CPA, go to uacpa.org to find the one that's right for you.
Thanks for being a Money Making Sense listener. Follow your common sense on the social media. Money Making Sense on Facebook, Twitter, and Instagram.